How to make money with tax sale auction overages. You don't need any money to get started. This is little known. Make money with tax auction overages has been available for decades. You can earn thousands of dollars without any initial investment, simply by knowing where to look. Today's video reviews the little-known world of tax sale overages. You'll learn how straightforward it is to claim money that most people overlook, and I'll guide you through the steps on how to do it. There's no bidding for overages required at a tax defaulted auction. The winner of the overages money isn't the highest bidder at the auction. Today's episode is all about how to make money with tax sale overages, which most people don't even know exist. By the end of this video, you'll learn how to identify, then claim, and profit from these overages. You can learn the steps to take on how to do this process before I finish today. To start with, here's a brief discussion on overages, which are dollars paid over the amount the county treasurer determined would be the starting bid on a property. So, just take a look here. This is an example. Tax assessed value was $100,000. The starting bid was $10,000. However, once the auction started, the highest bid was $45,000. So, the overage is the money that was overpaid over the starting bid, $35,000. So now you know for sure what an overage might be. Now, what if you didn't have $35,000? Well, the person that bought it has already spent the money, and the county has the $35,000. Today's episode is answering your question, how to make money with tax sale overages. But first, let's understand how overages are even possible. I'm about to discuss the overages process, revealing why overages occur and how you can position yourself to benefit from them. The auctions take place in all 3,000 plus counties across the United States. The properties are auctioned with starting bids are very close to the delinquent back taxes. Anyone can attend these auctions. If you're wondering what's going on, follow along with me. The legislature in each state creates the laws, and the state requires the local county board of supervisors or the county commissioners to manage the tax collector and require the tax collector to execute the state statutes or state laws. The legislature requires the county treasurer to assess taxes, then to levy taxes. If the treasurer, tax collector, cannot collect the taxes, the legislature mandates the county officials seize. That means they're going to confiscate the property. And once they have possession of the county officials they're required to resell that property at a public auction to the highest bidder. The revenue is used to pay the back taxes. Now, many auctions in good real estate markets will receive bids in excess of the starting bid, which is usually the back delinquent taxes, like you just saw in the example I showed you. All 3,000 plus counties across the United States are authorized to have public tax defaulted property auctions. The auction is held in a public place, many times in the county offices or even on the courthouse steps. The auctions are public outcry auctions. That means someone yells out a bidder's numbers or yells out an amount. The situation gets very interesting. The tax defaulted auctions have multiple functions. For example, the county utilizes the sale to transfer the property from the delinquent property list. They change its status back to the revenue producing property. That's what they're trying to do. The revenue from the auction pays many of the county bills. For example, the school teachers, firefighters, police, sheriff departments, hospitals. This is just a short list of the things the county has to pay. Keep watching, and in just a few minutes, I'm going to share a secret that most people don't even know exists. For example, a property valued at $100,000 and the owner has defaulted. The county has confiscated the property. The owner has forfeited their rights to own property because they haven't paid taxes. So here's what that example looks like. It's a repeat of the earlier one. Tax assessed value was $100,000. The county wants their back taxes, so starting bid is $10,000. However, bidders like the property, so they bid it up. So it bids up and the final bid is $45,000. So now the county has received an overage of $35,000. That's what an overage is. That money is going to go to the county because the county collected it. However, that money is owed to the property owner. The auction property has been delinquent, which means it's no longer on the tax roll. The tax roll is a list of all the responsible property owners that paid taxes. Now that property, because it's got a new owner, is going back on the tax roll, and that's exactly what the county wants. The defaulted tax auction where the property is sold generates revenue, pays all the delinquent taxes. Simultaneously, the county has now sold the deed, which now recycles the property back onto the honorable tax roll. Two processes have taken place. The back taxes are paid, and the county is happy. The property is recycled from a delinquent list back onto the honorable tax roll list. Competitive markets and savvy investors know, and now you know the following. The information is almost secret. 2 to 3% of all tax and tax deed investors realize the following. This is important. The property owner who defaulted may be owed thousands of dollars from that auction. In this particular instance, $35,000 is the overbid. This money belongs to the property owner. All of the money collected over and above the defaulted taxes belongs to the owner. In competitive markets, properties at tax defaulted auctions are sold to the highest bidder every single day. The question we're answering is, who gets the money over the minimum bid? The auctioneer could be a professional or it could be a county employee. The bidding will start at close to the back taxes. The bidding, which may be competitive, will stop at the highest bidder. In a competitive bid market with rising values, in our example, let's assume the property sold at $45,000. Let's say the new bidder is happy. Today's episode is all about how to make money with tax sale overages. That means we have to answer the question, what happens to the $35,000? The auctioneer, the tax collector, collects all $45,000. The tax collector ultimately is going to distribute some money for tax collection purposes. That leaves $35,000 remaining that goes to the county. At most auctions, the county does not own the property. The property was owned by a private owner. The money belongs to the private owner. Maybe the owner died, or in most cases, they just disappeared. Unfortunately, the county makes no effort to locate the owner. That desperate owner could use that $35,000 and it's sitting in the county treasurer's account. I'm not an attorney, I'm not a real estate broker, and I'm not a CPA. I'm an author, a publisher, and a prepared auction buyer. If the property owner fails to come forward and demand the $35,000, which could be really hard if they're dead, the county will have a generous gift. The money, the $35,000, will be held and used by the county after a number of years. I don't have the exact number, but a little research you could find out. Research will tell you the $35,000 will escheat, that's ESCHEAT, to the state, which means the state will confiscate that money unless the property owner comes forward and demands what is truly owned. Let me explain the steps for you to take to claim the tax sale overages. Start with the list of auctions. Narrow the list of the properties that were sold for more money than the county originally asked. This will reveal overpayments or overages. Next, you need to locate the former owner. This is going to be a challenge. The person is not sitting at a local park playing tennis, waiting for you to contact them with an offer to help them. Expect that you'll have to hire a professional skip tracer or someone to search and find the former owner. Some they will find, others will just disappear. I think you might find this interesting. In my library, I have an old Black's Law dictionary. I was curious about the process of the county government quietly, without publication, keeping the money from the auction sale, which was over the amount of the defaulted taxes. The auction process in this instance created money more than the government was owed. The process is called overages. And if the property owner demands the money, the county will give it to them. I reviewed this in my Black's Law directory and found the county attorney or the treasurer will refer to the process as the auction excess funds and respond when asked. The excess funds is sheets that is refers to the county. In the Black's Law Dictionary, it says it refers to the exchequer, which is Old English terms meaning the treasurer. The reality is, this has been going on for a long time. The county is quiet and deposits the money in the county bank account, where the county will hold the money, and if no qualified person, like the property owner or a relative, comes forward and makes a demand, the state will consume the money. Discover income potential with our free map of tax defaulted properties. Perfect for beginners and seasoned investors alike. Access your free map by clicking the link below in the description below and start exploring now.